Good morning and welcome to TOITOI Japan Market Radio, April 2, 2026. I'm your host coming to you from Tokyo. For global investors tracking Japanese equities, currency, and rates, today's session brought some notable moves worth unpacking. Let's start with the market summary. What did we see across the board today?
Thanks for having me. So we saw broad-based weakness in Japanese equities today. The Nikkei 225 closed down 2.375% at 52,463.27, while the TOPIX fell 1.593% to 383.0. The Mothers Index, which tracks smaller growth names, dropped 1.093% to 2,353.0, and J-Rights also declined 0.91% to 1901.5. On the currency side, dollar-yen moved higher by 0.658% to 159.622. In commodities, gold priced in yen fell 0.96% to 17,340.0, but crude oil surged 11.836% to 111.97, which is really the story driving a lot of today's price action.
That oil move is dramatic. Let's dig into what drove today's risk-off tone. We're seeing headlines around renewed geopolitical tensions in the Middle East weighing on investor sentiment. How significant is this for Japanese markets specifically?
It's quite significant, actually. Japan is one of the world's largest energy importers, with roughly 85% of its crude oil coming from overseas, and a substantial portion of that from the Middle East. When tensions flare up in that region, it creates multiple headwinds for Japan. First, you have the direct impact of higher energy costs, which compress margins for manufacturers, especially in autos, machinery, and materials. Second, there's the supply chain risk. Any disruption through key shipping routes like the Strait of Hormuz would be a major problem for Japanese exporters. And third, it triggers broader risk-off sentiment, which tends to hit equities in developed markets with stretched valuations particularly hard.
And we saw that play out today with cyclical sectors underperforming. What does this mean for the yen and Japanese government bonds?
Well, geopolitical uncertainty typically drives safe haven flows, and the yen is a classic beneficiary of that dynamic. Even though dollar-yen ticked higher today by 0.658%, I'd expect that if these tensions persist or escalate, we'll see renewed strength in the yen as investors rotate into safer assets. A stronger yen, of course, creates another headwind for Japanese exporters by reducing their competitiveness abroad. On the JGB side, risk-off sentiment usually compresses yields as investors buy duration. However, if energy prices stay elevated and start feeding through into domestic inflation expectations, that could complicate things for the Bank of Japan and put upward pressure on the long end of the curve.
That's an interesting tension between safe haven flows and inflation concerns. Now, there was also specific commentary around remarks from former President Trump that apparently rekindled concerns about potential military escalation with Iran. How much of today's sell-off do you attribute to that catalyst?
It seems to have been a meaningful trigger for the risk-off move we saw in Tokyo. Trump's speech appears to have revived worries about military confrontation, and that uncertainty is exactly the kind of thing that makes institutional investors pull back from risk assets, especially in markets like Japan that are sensitive to energy security. Remember, Japan's corporate earnings are highly sensitive to oil price swings. When crude spikes like it did today, up nearly 12%, that's a direct hit to input costs for a wide range of industries. So the combination of geopolitical rhetoric and a sharp move in energy prices created a pretty toxic backdrop for Japanese equities today.
Understood. Shifting back to equities for a moment, I noticed there was some conflicting information in the headlines today. One report mentioned the Nikkei surging 5.24% with Advantist leading gains of over 10%, but clearly that doesn't match today's actual close. Can you clarify what might be going on there?
Yes, that's a good catch. It looks like there may have been some confusion with dated headlines or prior session data. What we actually saw today was the 2.375% decline in the Nikkei that we discussed earlier. However, it's worth noting that Advantest and the semiconductor equipment sector have been strong performers in recent weeks. The semiconductor space remains a strategic priority for Japan, both from an industrial policy perspective and as a key export sector. So while today was a down day, the broader trend in Japan's tech and semiconductor names has been constructive, reflecting optimism around chip demand recovery and Japan's push for semiconductor self-sufficiency.
That makes sense. So even though we had a risk-off session today, the underlying drivers for Japan's tech and export sectors remain intact. What should global investors be watching in the near term to gauge whether this pullback is a temporary blip or the start of something more sustained?
Great question. I think there are three key things to monitor. First, obviously, the trajectory of Middle East tensions and whether we see any actual disruption to energy supplies or shipping routes. That would be a major escalation. Second, watch the yen closely. If we start seeing sustained moves stronger in yen terms, say, back toward 155 or below, that's going to put meaningful pressure on exporters' earnings outlooks. And third, keep an eye on how the Bank of Japan responds in their communications. If energy-driven inflation concerns start to build, that could force the BOJ's hand on tightening policy faster than markets currently expect, which would be another risk factor for equities.
On the policy side, do you think today's market action changes the calculus for the BOJ at all?
Not immediately, no. The BOJ has been very cautious and data-dependent in their approach to normalizing policy. A single day of risk-off trading driven by external geopolitical factors isn't going to derail their broader strategy. However, if we see sustained weakness in equities combined with upward pressure on imported inflation from higher energy costs, that does create a more complicated environment for them. They want to normalize policy, but they also don't want to tighten into a weakening economic backdrop. So it's a balancing act, and today's move is a reminder of how external shocks can complicate that calculus.
And for global investors who have exposure to Japanese equities through Nikkei or TOPIX linked products, what's your take on positioning here?
I think the key is to differentiate between tactical noise and structural trends. Today's sell-off is largely driven by geopolitical risk premium and energy price volatility, which are inherently unpredictable in the short term. But structurally, Japan's equity market still offers attractive characteristics, improving corporate governance, shareholder returns, reasonable valuations in cyclical sectors, and exposure to global tech and capital goods demand. So if you're a long-term investor, this kind of pullback can actually present opportunities, particularly in quality exporters and tech names that got caught up in the broader sell-off. Of course, near-term volatility is likely to remain elevated as long as Middle East uncertainty persists.
That's helpful context. Meanwhile, in corporate news, even though we had a down day overall, it's worth noting that the semiconductor sector has been a bright spot in recent trading. You mentioned Advantest earlier. What's driving the strength in that space?
The semiconductor equipment sector in Japan is benefiting from several tailwinds. Global chip demand is recovering after a downturn, and there's significant capital expenditure happening across the industry as companies build out capacity for advanced nodes and AI-related applications. Japanese equipment makers like Advantest, Tokyo Electron, and Screen Holdings are well positioned in that value chain. Additionally, Japan's government is actively supporting the semiconductor industry through subsidies and partnerships, which is bolstering confidence in the sector's long-term outlook. So even on a day when the broader market is weak, you can see why institutional investors would view dips in these names as buying opportunities.
Staying with the theme of sector performance, what happened with J-REITs today? They were down just under 1%, which is relatively modest compared to equities but still notable.
J-REITs tend to be sensitive to interest rate expectations and risk sentiment. The 0.91% decline today likely reflects a combination of factors. On one hand, if investors are worried about a risk-off environment, they might reduce exposure to yield-oriented assets like REITs. On the other hand, if there's any concern that inflation pressures from higher energy costs could push JGB yields higher, that would also weigh on REIT valuations since they're effectively long-duration assets. That said, the move was relatively contained compared to equities, which suggests the right market isn't seeing a major repricing of fundamentals, just some tactical profit taking.
And what about gold priced in yen? It fell 0.96% today, which seems counterintuitive given the risk-off sentiment. What's your read on that?
That's a good observation. Gold in yen terms reflects both the dollar price of gold and the yen-dollar exchange rate. Today, dollar-yen moved higher by 0.658%, meaning the yen weakened slightly against the dollar. If dollar gold was relatively flat or down slightly, that would translate into a decline in yen terms. Additionally, in the very near term, when markets sell off sharply, you sometimes see investors liquidating even safe haven assets like gold to raise cash or meet margin calls. So the move in gold today is more a function of currency dynamics and short-term liquidity flows rather than a rejection of the safe haven thesis.